Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment markets. Well, the Fed's officially raised interest rates again, and we've talked about that. We estimate that the Feds will raise interest rates 3 to 4 times this year, twice so far. And again, one of the reasons the economy is getting just a little bit stronger. We've exited, as all of our clients know, out of Europe months ago, which I'm glad we did, because Europe's basically had its bump up. It seems like it's tapering off. Very slow growth in Europe, very oversaturated, more socialist, and again, socialist policies do not work well for a growing economy. The U.S. is doing well, and we're seeing the overall emerging market economies, again, doing quite well, and valuations are reasonable. We feel that interest rates will continue on an upward movement over the next couple of years, assuming the economy stays on track. We plan on making just a couple fine-tuning adjustments within our portfolio shortly in order to, what we feel, take a little bit of risk off on the bond exposure. One of the things that I think is highly important for every investor to realize, volatility in any asset category, whether it's the bond market, the stock market, real estate, gold, whatever, every asset goes up and down. Again, we're still seeing normal volatility this year, and I expect this to continue. Volatility gives you the opportunity to make a realistic return. What I am seeing, again, of course not with our clients because we are properly managing the funds, but what we're seeing from a lot of the calls from our TV and radio show and also various workshops that we do or talks that we do is a lot of investors oversaturated in bonds. Sometimes 60-70% of the portfolio and the wrong type of investment in bonds or the wrong types of bonds. And again, that can be devastating to a portfolio. One of the questions I've had a lot from people from various workshops or speaking engagements I put on is, Brian, why do other advisors have people in so much bonds? And it's simple. Most firms, the Wall Street firms, the banks, and the insurance companies do what we call stock asset allocation. It's always in this pie, chopped up, divvied up, in the same allocation all the time. That's what we've seen. The problem with that is you always have maybe too much bonds when you shouldn't, or maybe too much equity when you shouldn't. They don't actually strategically manage the money. It's kind of a set it and forget it. That's not Resney Wealth Management. We will adjust our portfolio structure based upon changing economic conditions, and that's one of the reasons we have significantly changed our bond portions of our portfolios in the last couple years, because we feel we needed to move to a more conservative nature in bonds, which we've done already for our clients many, many months ago. Overall, we like the economy, we like the job market. The tariffs that a lot of people are talking about right now, again, to me is going to be a moot point. This will eventually be worked out. I will tell you, we've been the piggy bank of the world. Those are exact words from our President Donald Trump. We have been the piggy bank of the world. Other countries have been basically taking from America and the taxpayer. This needs to stop. Even fair playing field. Most other countries have huge tariffs on U.S. products, but we don't have tariffs on theirs. Now they're complaining that we're stepping to the plate. This will get worked out, in my opinion. We're not overly concerned. If we were, we would already be making adjustments. Again, we're not seeing current signs of recession, although we have a heightened elevation, but not current signs of recession. If you're a client of our firm and you have any questions, please call the office. If you're not a client of our firm, as always, call our office, schedule a consultation. It's time you became a client of Resney Wealth Management. Have a safe and profitable day.